Hey everyone, ready to dive into the Singapore stock market. Some seriously interesting stuff happening today. We've got Keppel going all in on AI, ComfortDelGro's like building a taxi empire overseas, and even a South Korean burger chain trying to win over Singaporean taste buds.
Yeah, it's wild, right? Global trends mixing with that local flavor impacting all these companies.
Totally.
Let's kick things off with Keppel. Their latest earnings report, well, at first glance it might seem a little, well, underwhelming. Profits dipped this quarter.
Yeah, a bit of a change from last quarter, right? When they had that boost from selling off assets.
Right, exactly. But here's where things get interesting. They're going all in on data centers, trying to ride that AI wave everyone's talking about.
Doubling down, huh?
Yeah. It's not just hype, though. Think about all the data being generated, all those AI applications needing massive computing power. That's where data centers come in, right?
Makes sense.
So Keppel's strategy to expand their data center portfolio, pretty smart move if you ask me, positions them right in the middle of this growing demand.
But any investment has risks.
Bro,
Thought-
absolutely. The data center market could get, I don't know, oversaturated.
Yeah.
Or technology could change, disrupt the industry, who knows?
True. Makes you wonder if they're seeing something we're not.
Right.
Okay, so let's switch gears. Mapletree Logistics Trust, MLT. They're planning a major shakeup, selling off about $1 billion worth of assets, mostly in China and Hong Kong.
Wow.
But at the same time, they're looking to buy properties in like Vietnam, India, even Japan.
Interesting. What do you think about that?
I don't know. What do you make of it?
Well, it's like a classic portfolio rebalancing act. MLT is basically shifting their bets, moving away from some mature markets and tapping into regions with, potentially higher growth.
Makes sense.
Vietnam and India, those are booming economies, rising middle class, increasing demand for logistics infrastructure.
Right.
Japan, on the other hand, it offers stability, well-developed market,
Right.
diversifying geographically, spreading the risk.
So MLT is playing the long game, hedging your bets for the future. Now, for something completely different, ComfortDelGro is expanding its taxi empire. They just bought Addison Lee in the UK,
Really?
added a massive fleet, over 34,000 vehicles.
Wow.
Yeah.
That's a bold move. Gives them a strong foothold in London's transportation market, which is, well, it's pretty competitive.
I bet.
Addison Lee offers a range of services, premium private hire, courier services, and even those iconic black cabs. It's interesting to see ComfortDelGro expanding globally, even though, well, their share price dipped slightly before the announcement.
Yeah, maybe investors weren't sure what to make of it at first. It's definitely a sign of ambition, though. Now let's talk about Hotel Properties Limited, HPL. They just issued 160 million Singapore dollars in perpetual securities.
Oh, okay.
Not exactly a term we hear every day.
No, not really. Think of it like a bond, but it never matures. It pays interest indefinitely. Gives HPL a long-term source of funding. They're using it to refinance existing loans, make sure they have enough cash flow for day-to-day operations.
So it's like a financial safety net.
Right.
Okay, let's move on to real estate. OUE REIT's latest report shows a mixed bag. Revenue held steady, but their net property income took a dip.
Interesting. What's the story there?
What happened?
Well, the main culprit seems to be higher property taxes. Hit two of their hotels, actually, Hilton Singapore Orchard and Crown Plaza Changi Airport. But there's a silver lining.
Okay.
The office sector is looking promising. Delayed completions could lead to higher demand, higher rents, and with interest rates looking favorable, OU REIT might be able to capitalize on that.
So some headwinds, but also potential tailwinds.
Exactly.
And speaking of real estate, Digital Core REIT presents a bit of a puzzle. Their distributable income, the money they pay out to investors, is actually up almost 10% compared to last year, even though their overall revenue and property income went down.
How do you make sense of that?
I don't know, it's strange, right?
Yeah, it is. This is where understanding the underlying trends is crucial. Digital Core REIT focuses on data centers, and that sector, booming, thanks to AI and cloud computing. Even though some of their other properties might be facing challenges, the strong performance of their data center assets is driving those higher payouts to investors.
Interesting. So it's all about looking beyond the surface, understanding what's driving those numbers.
Exactly.
Now, for all you burger fans out there, get ready for a new player on the scene. Katrina Group is bringing the South Korean burger chain Lotteria to Singapore.
Oh, wow. Lotteria is a big name in Asia, known for their tasty burgers, unique menu items.
Really? I've never heard of them.
Oh, yeah, they're pretty popular.
Ah.
Could really shake things up in the Singaporean fast food market.
Yeah, I bet.
It'll be interesting to see how they position themselves, whether they can capture a slice of that burger-loving crowd.
Yeah, the competition is fierce. Now, last but not least, let's talk about Nera Telecommunications, or Neratel. Ennoconn Corporation made a play for the company, a mandatory cash offer to buy out shareholders. But it seems like many shareholders weren't interested.
The acceptance rate was surprisingly low, just over 10%. This means that despite the offer, most Neratel shareholders chose to hold on to their shares.
Hmm.
Ennoconn and its partners still ended up with a significant stake in the company, about 63.77%. But the low acceptance rate, well, it does raise questions about the future direction of Neratel and how this new ownership structure will play out.
Definitely a story to keep an eye on.
Definitely. Really highlights the uncertainties and complexities of the market, doesn't it?
Yeah, for sure. What seems like a sure bet, well, doesn't always work out.
Right.
Speaking of strategy, MLT's decision to divest from China and Hong Kong, while at the same time looking for opportunities in other markets, that really got me thinking, what kind of signals are they picking up?
It's a great question. It could be a few things, right? They might be reacting to geopolitical tensions, seeking higher growth markets, or just, diversifying their portfolio.
Hmm.
Remember, China's economic growth has been slowing down. There are concerns about political risks. So by shifting their focus, MLT might be trying to, I don't know, mitigate those risks.
Right, makes sense. And capitalize on emerging opportunities elsewhere.
Exactly.
So it's not just about chasing the highest returns, but also managing risk, positioning yourself for long-term success.
Absolutely.
It makes you realize that investing is as much about understanding the bigger picture,
Yeah.
the global economic and political landscape, as it is about analyzing individual companies.
Couldn't agree more. For instance, rising interest rates and inflation. Those can really impact real estate investment trusts like OU REIT and Digital Core REIT.
Oh, how so?
Well, higher interest rates make borrowing more expensive, which could affect their profitability, right?
Yeah.
And inflation, that can erode the value of their assets.
Yeah, that's true.
On the other hand, global supply chain disruptions, those can affect logistics companies like MLT, as we've seen recently.
So many interconnected factors to consider. It can feel a bit overwhelming at times, to be honest.
It can.
What advice would you give to our listeners who are trying to navigate this complex market?
Well, I think the key is to do your homework. Don't get swept up by the hype. Don't just, jump on the latest bandwagon or follow the crowd blindly. Take the time to understand the fundamentals of the companies you're interested in, their long-term strategies, the factors that could impact their performance.
Right, really understand what you're getting into.
Exactly. And remember, diversification is key.
That's such a crucial point. Don't put all your eggs in one basket, right?
Exactly. Spread that risk around. And don't be afraid to seek out expert advice if you need it. Financial advisors can help you develop a personalized investment strategy,
Good point.
one that aligns with your goals and risk tolerance. Remember, investing is a journey, not a sprint. There will be ups and downs along the way. The important thing is to stay informed, make informed decisions, and learn from your experiences.
Speaking of learning, you've been a fantastic guide through this market maze today. You've shared such insightful analysis and really connected the dots for us. I feel like I've learned so much in just this short time.
It's been my pleasure. I always enjoyed diving into these topics, exploring the complexities of the market. It's a continuous learning process for all of us. There's always something new to discover and analyze.
Absolutely, and that's what makes it so exciting. Well, folks, we've covered a lot of ground today. From AI to burgers and everything in between, we hope you've enjoyed this deep dive into the Singapore stock market as much as we have. But before we sign off, we want to leave you with one final thought to ponder.
As you continue your investment journey, keep in mind, stay curious, keep asking questions, and don't be afraid to, challenge the conventional wisdom.
Yeah, good advice.
Sometimes the most unexpected opportunities are in the places we least expect.
Absolutely, so true. Well, on that note, we'd love to hear from you. What are your thoughts on all these market movers? Which companies or trends are you watching? Share your insights with us. Hey, maybe your question will inspire our next deep dive. Until then, happy investing.